People turn to financial advisors to invest in stocks and mutual funds as ways to generate income. But have you ever wondered who is actually responsible for the safekeeping of your assets? Joining us to discuss this more is Everything Financial President Peter Sashecki. Peter, good morning.
Good morning.
Good to see you. This is important to know who's safeguarding your hard-earned money. A lot of people don't think about this. They assume that their investments are safe, but the investment advisors are required to arrange for a custodian. What is that exactly?
The vault.
It's called the vault.
That's the nickname in the industry. So a custodian, registered banks are custodian. There's a whole list of them. You can look them up actually in Canada. But so the mutual fund salesperson or the bank, or even when we've talked about portfolio managers, they trade the money, they build the portfolios, they trade the underlying stocks, but you should have your money actually held with a custodian, which is the custodian is the vault where the money is actually held. So they're the ones who open the accounts. They're the ones who provide your tax statements, your tax receipts, your statements, etc. So the portfolio management company, the mutual fund company is trading, but the money's held kind of behind this little protective case.
For clarity, because I don't actually know this, is the custodian, the vault, is this a person or is this a company?
It's a company. It's a bank.
Okay.
It's registered banks in Canada. So biggest bank in Canada, RBC. But RBC is the bank. But the division of RBC Dominion Securities, is a vault, and there's Royal Trust, and there's just a whole credential through the credit unions. There's a whole list of them. Laurentian Bank Securities is another one.
Okay.
There's so many of them, but they're actually holding the money. They're all protected, insured with the government, etc. So your money is safe from someone absconding with your money.
Well, that's good to know. But is there a cost involved with having a vault?
It's very small. It varies, but when we talk about fees of portfolio management, and some of those fees are like 1.5% all in for everybody, but the custodian cost in there might be like 0.15% of the total. So it's built in. Even with mutual funds, when I slam them lots for the embedded undisclosed fees, but one of those undisclosed fees could be the custodial fee built into the overall fee. So, and they're very low, and that's what's great, and provide you a lot of safety and protection, which is the most important thing.
Yeah, so you touch on this, but how are they regulated in Canada?
Well, they're by the government. I mean, they're insured by the government. So if custodian A decides they don't want to do this anymore and they sell, well, other custodians will buy up that custodian, so your money is still protected. Or God forbid, and this hasn't happened in quite some time, but one of them went under for whatever reason, they're going to be bought by other custodians, so your stuff's protected. You don't have to worry about the safety of the vault, which has become the nickname.
Right. Okay. So, are there any misconceptions about independent investment firms that somehow they might be risky custodians?
Yeah, and we talked about this a bit last week, where people are saying that, oh, you don't want to go to independent company or the small company or whatever the case may be. Your money's not safe. Your money has nothing to do with the independent firm. If your independent firm is whether they're using mutual funds or they're using portfolio management, as long as that money is held with a custodian, the independent firm has nothing to do with it. So that's a lot of misinformation provided by salespeople in certain companies to try and scare consumers, but it's completely false. Ask who is the custodian, do a little bit of your own research, and if they've got the custodian and that's where your money's held, it's got nothing to do with the size of the firm. Okay,
that's interesting. And people might want to know, is there an alternative that is more cost-effective than using a custodian?
Not really.
Okay.
I mean, that's the safest way to do it. I mean, the cost is so low, Carrie. Just watch for when there is no custodian. Like with a lot, not always, but with segregated funds with insurance companies, they're not held to the same standard. So you're better off to go the route of the investment, portfolio management, mutual funds, and a custodian.
And protect your money. Okay,
you bet.
Peter Sashecki with Everything Financial. Thanks, Peter.
Thank you.
Have a great day.
You too.